Alright, hello. Welcome. Today I'll do a daily review of Friday. It's Saturday today, but yeah, basically I didn't have time yesterday to do one, so I'll be doing it today. Doesn't really matter. Tomorrow I will do uh a forecast of basically what I think or a forecast. Yeah, what I think will happen next week. So first, let's start with the daily. Again, on daily we can see this was an institutional financial drill. This went up and we had a what? An inside candle, which could have been awaited, right? Expected, because even bank holiday Monday was very volatile. Tuesday was even more volatile. Wednesday was like okay. Thursday was very volatile. And Friday just consolidated. It was an inside candle consolidation. So let's see what happened on the 1 hour. Yeah, you can see there wasn't much really. This is Friday. Here. This is Friday. Just you can see this is a time distortion, right? This doesn't show price this time. This is bad. Um, well, if I go to my drawings, what do I have here? Oh yeah, I still have the midnight. Alright, perfect. Yeah, so this is the midnight of a Friday. We didn't even go down that much, right? This is kind of yeah, just a little bit below midnight price and rise. That's not really good, but yeah, happens. We can see. I think this was an hourly fair value gap. That was a manipulation of the day, the law of the day. For Friday, because it just went down. Well, actually, it wasn't really Fridays. Friday starts. But yeah, I think. Wait, isn't this? Yeah, the candles open. Yeah. Basically, this was the low of the day at Asia session, which is not really ideal, I guess, but something. Yeah. Anyways, and just see just went up, and we did a 1 hour market structure shift, right? We got low, high, lower low, higher high. This is a market structure shift. So this is the midweek reversal. So we're ready to go upwards, which it did. We see it retraced. It went up to this order block, just barely retraced into this fair value gap. Now, the reason, right? This is not the 50% of the range. If you look at it, right? This is not even if you go from here. This is not the 50%. Not even close. But we could have expected it not going to this fair value gap. First of all, because you can see this, right? There's a lot of there was some price action behind this fair value gap. We got this, you got this. So basically this small consolidation was made in next to this fair value gap. So we wouldn't really expect it to come down here. But this one, yeah, there's nothing here really. So yeah, went in. And we can see it went in at 5. That's uh that's London. That's after the London session. Yeah. And the next candle we can see was an institutional order for entry drill, right? It went down. Actually, it didn't even go down. It went close, swept the previous day low. What am I saying? I'm sorry. It's late. It's not really late, but I'm tired. We took the previous candle low into the fair value gap. That's an institutional reflection drill by itself, and it just went up. So that's just confirmation. He's gonna continue up. So we expected the next candle. We expect the next candle to be an open, low, high, close, right? A bullish candle. And we can see just went up. There was no signs of rejection much here. We can see prices closer to the high than the low of this candle. So we expected it to go even higher. Then there was New York session. That was a disaster. That was an absolute disaster. You saw I marked out this order block and this fair value gap. This is the fair value gap. This is the order block. This candle, right? And we can just see price just went in, went out. That was crazy, I guess. Then we can see after it went in, it went into a 4-hour order block, right? This is a 4-hour order block. This candle right here. So what we could have like, what could we expect from this, right? We have the resistance here and here. So what we could have expected is just for it to be going up and forth, right? And so it did, right? This was my DOL for the day. I wanted to see this high get taken. As it would have, yeah, just showed clear signs of it taking it, right? We had this nice displacement with a market structure shift, institutional for entry drill going up, retracement into a 1-hour order block and fair value gap. So I expected it to go higher, you know, tap this high, not tap this. It was the previous day high. But yeah, this was since we were in an inside candle, I wouldn't see this really happening. I just thought we were gonna be stuck in this range, and we were. Um, yeah, but you can see it was just a mess. After that, well, New York session was just a consolidation, nothing much, just a consolidation, really, just a range. I saw you see I was trading here. Was looking to do a market structure shift. I don't know what this is up here for some reason. Oh yeah, wait, no, I don't know what this is. Yeah, this was also a was this a 4-hour? I'm not sure. Yeah, yeah. I was also marking out this 4-hour for value gap when I was looking at it, right? This fair value gap from this candle's high to this candle's low. Fair value gap. I expected it since we entered a 4-hour order block to retrace down into there, into this fair value gap, and it didn't. It went just into the 1-hour. But on the S&P it did, right? It went in this fair value gap. Even entering the order block. So I expected it to go up. We can see again, right? 4-hour resistance to the upside and to the downside. So just bouncing up. It's just consolidating. You know, nothing much. So yeah, this was an SMT. Um, that's I really expected it to go really high. I maybe even expected it to take this previous day high. It didn't. Yeah, and the rest of the day was just consolidation. As you can see, there was really nothing. New York was consolidation. Lunch was an expansion. It's the upside. PM session was also consolidation. There's really nothing. There was nothing. Just Asia was a little bit more volatile, and we had London just go straight up. Nothing really from London offered. Same thing like yesterday, basically. Well, Thursday. Oh, yesterday, Thursday. But yeah, that's basically it. A low probability day. Didn't trade this. You shouldn't have traded this. No one should have traded this. And if you did and you made money, yeah, hell yeah, why not? You could have made money from this, right? Here. At London session, after London session you could have made money. Entering after this institutional order for anti-drill, right? You could have waited for it to sweep this previous candle low and look for, let me just mark this out, and look for look for entries, right? You can see we tapped into it here, here, here. But when we tapped into it here, we stopped this equal lows, went up. What is this? We got a low, high, lower, low, higher, high, market structure shift. You could have marked this out as a market structure shift. And it was a nice market structure shift actually because we got displacement, right? Boom. You can see we have rejection block. Then we expected order block. We got the fair value gap as well. And we got the breaker right here. So you could have marked out this breaker. And this is a unicorn model, right? Breaker. And this fair value gap right here. Boom. Boom. Yeah, you could have entered on here. Stop at least the rejection block, and you could have targeted this high. 2.6 hour. That's, I think, for me that's quite nice. I think, like, you know, or maybe we could have went straight for this high, right? My drawn liquidity, but this would have been a, you know, a long trade, risky. Yeah, I don't usually go for that, but yeah, you could have. I think a better version would be the London high. That would have been definitely taken. So just put the stop loss at least here. So if you're going for that high, and you got a nice for. Actually, of course, this is hindsight, right? You can say this is tape reading. You can really say you would have got this. I can say I could have got this, but what I can say is that what I would have got is at least this, right? I would have seen price go into the breaker, the fair value gap, and what I'm waiting for is in an open low high close confirmation, right? So what I don't know. I was looking for an S&T. I'm stupid. I'm sorry. Here, yeah. So basically, I would have waited for this candle to print. I didn't need to, right? But just me, I like the open low high close entry better. I could have entered on the open of this candle. I would put my stop here or below this order block, and since we have no more inefficiencies, imbalances here, there's no reason for price to retrace, right? We feel this, so I could have just put it here, targeted it this high, and could have gotten a nice 3R, right? Still, yes, I could have gotten this entry, put my stop here, but I like this better, you know. I don't know. It feels like it's the last piece for my entry. I like it better when I have confirmation that price is actually going up, because it could have just went down here and then retraced, right? But yeah, if we went down here, it would probably have taken the low, but it could have, right? Could have. I just like more confirmation. Open low high close, open low high close. Yeah, open low high close is a good confirmation for me. And we can see, right? This is took this. You got this displacement through this gap as well as that. Could have entered the open easily. It would be better if it took also the previous candle low, but who cares, right? This is enough. It's not really, for me, it's not really something I'm looking out to. It just adds up, I guess. If it takes the previous candle low, I'm just sure this is an institutional influential drill. It just happened that this candle is really displacement, good displacement. So I would enter on this. Yeah, put my stop here. Boom. 2.8R. Beautiful. Beautiful. course, this is again hindsight, but this is this is like the closest target I would go for, right? And this is the only entry I could have gotten here. This is also a market maker buy model. Uh, this is the smart money reversal, and you got this original consolidation. Up. So yeah, this would have definitely been a nice trade. Also having the no wait, I'm stupid. No, don't watch S&T. Ah, never mind. Yeah, this is a nice model. I think I like this model. But yeah, I guess it's sometimes I just either enter for this if I'm really sure it goes up. I mean, there's nothing really. I don't know. I just like to know just my rules basically. I just like the open, low, high, close confirmation on my entries. So I like to stick by it that I wait for price to show me that it's gonna go up after the retracement, rather than assuming it's gonna go up after entering on this fair value, after going to this fair value gap, because it doesn't need to. It really doesn't need to, right? You could just go and take this and then go up. But if I have this confirmation with the displacement to the upside after entering the fair value gap, this really just shows, yeah, it's going up, like, you know. Or if price just straight up does like the open, the institutional default entry drill, right? But it just goes like this, it goes in, and then just switches and leaves this huge wick. I'm gonna just and close it like this. I enter again on the open of the next candle because this is institutional for order for entry drill. This is not institutional order for entry drill because we didn't take the previous candle low, plus it didn't, do a go down and then straight up again. But the next candle placed up, so no, that's enough. It also depends, I guess. But really, yeah, my rules, I stick to that. Open, low, high, close. Confirmation. Boom. That's it. Yeah, this is actually really beautiful now that I look at it. I really like this entry. I love it. Yeah, so that's it for this video. Shorter. There's nothing really to say about this other than it was a horrible day to trade at the New York session. So yeah, tomorrow weekly forecast will say. So bye.